For anyone catching up, we're talking about ResearchCoin, and my concern anytime there is a Web3 or crypto project that designs a one-token system to both encourage speculation and fulfill some intended use like funding research, building a research community, decentralizing science, that we create a double bind, a competing incentive. We're asking the token to do too much, and here's what I mean. There are the people who want to use research token to fund research and be rewarded for the research that they do. And then there are the people who see the solution to the research problem you've articulated and say, oh, this is a really good solution. I should invest in this. And the only means they have to make an investment is to buy the token or participate in the platform in a way that would allow them to earn it. Now, neither of these is a bad use case for crypto tokens, but trying to do it with one token creates a couple of problems. If the price of RSC rises significantly, that might deter new users from purchasing RSC to fund research or participate in the ecosystem, creating a situation where the token's volatility undermines its utility. It makes it challenging to set stable prices for tasks, contributions, or rewards. Researchers might not want to accept RSC because of its unpredictable value. And it might deter funders from using RSC to commission work because its real-world value fluctuates so dramatically. And because the general population, broadly speaking, is not that familiar with crypto, it might be difficult for them to adjust their expectations. Now, I've seen that they've taken a lot of steps to kind of mitigate this risk, and obviously, since they're building a platform, they're creating all kinds of value by network effect. But if I was going to put on my founder's hat and try to solve this problem, here's what I'd be thinking about. The first thing is stablecoin integration. Pegging transactions to stablecoin or fiat where the price stability is paramount. This could help manage volatility for specific operations while still leveraging RSC for governance, tipping, and other flexible use cases. May have already done this, but if they haven't, I would definitely implement dynamic pricing models to automatically adjust the amount of RSC required for a task to a price reflected in US dollars. It's got to be consistent, transparent, and easy for users to understand. Obviously, you got to continue educational initiatives so that the acumen of your community comes up, that they understand cryptocurrency, tokens, decentralization better and better over time. I'd want to think about integrating NFTs for expressions of identity, status, achievement, and to add provenance and verifiability to research that can be updated over time. And I get that they're a foundation, but also if they're a serious company, they might consider doing something for profit and launching a stock or other kind of more traditional investment vehicle to decouple the speculation from the utility, at least in terms of assets. That's just a couple ideas, and I understand that they're probably already doing some of this. But whether we're talking about ResearchHub Foundation or anybody who is trying to find a decentralized crypto-based solution to a problem, in all things, if a cryptocurrency token is liquid, if it can be traded on markets for money, you have to balance maintaining a token's utility in an ecosystem with the speculative aspects inherent in cryptocurrency or any market. I love the vision of ResearchHub, and I hope they and more people can discover the possibility for decentralized solutions to real-world problems.